joined by Rachel Ziemba, senior analyst at Roubini Global Economics. And it really goes without saying that 168 billion in frozen assets is going to be absolutely key to the rebuilding of the country.
Indeed, I think, and Libya is going to need a lot of investment. It's going to need both some of its own, but it's also going to need foreign investors. Like you say, a certain amount of the funds are not necessarily going to be there. Some of the Italian equities have been sharply hit. Even some of the cash and deposits. We actually imagine that some of the unfrozen assets might well have been drawn on by the regime. Some of it might have been held in deposits offshore in places that the U.S. and European financial leaders couldn't freeze, perhaps even in jurisdictions elsewhere in the Middle East. But on net, this is going to be a source of support. The thing is, we don't think the rebels are going to be able to touch it until they fully have control of the Libyan government. Even in the UK, some weeks ago, when the TNC was designated the only representative
because they have
member
legal
of government,
status now, right?
They do, but we still haven't seen British authorities unlocking much of the frozen assets. There have been several $100 million. This is a positive.
Well, now, why is that, given that Western countries have been backing the rebels in the NATO bombing campaign?
Certainly. Well, I think that in Western governments, we're very concerned about making sure the end user, the actual owner of the assets, receives these assets. So this creates a set of issues with sovereign assets, because on the one hand, they are the assets of the Libyan people, but on the other hand, they may also be the assets of given state-owned companies, and so it becomes a bit murky. So all I'm trying to say is that it may take some time.
How much time? What sort
funds.
of process? What sort of timeline are we looking at?
I mean, it's very hard to speculate, but I do think we could be talking about months to unlock it. And given that we are still in a circumstance where it's very uncertain how quickly things might play out in Libya, things are in flux, and the finances as well.
I mean, when we speak about Libya and their economic situation, well, the key thing is oil, is that you've had that Libyan oil coming off the market, and not only is it going to impact the country's ability to rebuild after what is essentially a civil war, but also it's having an impact on financial markets as well.
Indeed.
I spoke to one analyst yesterday from Barclays Capital who said they may never reach full capacity.
Exactly. Our view is that you would need a fair amount of investment to get anywhere near back to full investment. First of all, because we don't know the state of the infrastructure. Also, many of Libya's wells and production were aging. They require fairly extensive secondary recovery techniques. You're starting to need to pour more liquids in to get out the oil production. And we don't know what the regulatory framework is going to be like, or security framework. If we continue to see any new regime having to fight to retain control of the country over time, we could see foreign players be reluctant to fully invest their capital and their workers. That being said, there's not a lot of new oil being produced around the world. There's going to be interest in this oil. We just figure getting anywhere near full capacity is going to be a matter of years. We expect there'll be a symbolic increase in oil production, a couple 100,000 barrels a day increase over a period of weeks or months after any regime change.
Yeah.
But getting up to
this
even
is the key thing, isn't
barrel.
it? Yeah, political and security challenges could certainly inhibit access to that oil. Rachel Ziemba of Roubini Global Economics, great to talk to you.
It's a pleasure.
Thanks very much.
For having me.